This is our Forex blog for April 21st, 2011. And like most days, you really want to trade the weakest ones against the strongest, strongest versus the weakest. You know, obviously you buy the strongest versus the weakest, and you sell the weakest versus the strongest, depending on which one's on top or bottom. Dollar, super weak. You know, weak yesterday and for the last couple of days. Daily, weekly, monthly trends down. Extreme weakness coming into midnight. Very little strength. It's very safe to assume most times, and most times the future pans this out, is when you have incredible weakness and when the daily, weekly, monthly trends down, and then you have a counter trend trade for an hour to 3 hours without that much statistical strength, that the previous trends, you know, likely to reverse. So coming into one right here, it was very predictable based on our currency meter that you'd want to look to sell the dollar. Now, you want to sell the dollar against some of the stronger pairs. The yen, daily, weekly, daily, weekly trends up, the monthly trend's still down, but it was, you know, strong coming into 1 o'clock. So you could have certainly looked to sell the dollar yen. I don't like that currency, don't trade it that much. It's a personal preference. The euro, the daily, you know, and weekly trend had shifted down after 7, but earlier last night probably both were up, and coming into the midnight it was strong. The pound, not much weakness coming into the midnight, a little bit of weakness here, and then all of a sudden at 3 it became strong. So at 3 you could have traded the pound dollar. Before midnight and up until about maybe 6, there's almost no weakness in the euro, and you'd want to trade the euro, and also the Swiss, extremely strong on all time frames. So that means selling the dollar Swiss, looking for buys in the euro dollar, looking for buys in the pound dollar. Let's start with the euro dollar here, coming up to you know, right before midnight here. The market's going sideways. We have the previous week's high, some false breakouts of it earlier. The market had shot up way too much earlier and really needed to kind of settle. The fact that it didn't pull back much at all, and then tried to go up, and then on this pullback here it really didn't even come close to hitting the previous low. When it broke out right here, it was a pretty high probability trade, and you can see it exploded up. The euro was extremely strong, the dollar was weak across the board, and this just went up. You probably would have got out near the upper containment bands, and as it went sideways right here, notice no pullback whatsoever, another sideways rectangle shaped pattern, and it broke out again. Now when it's above the upper containment band, most times it's not going to go beyond the fib targets. So you know, if you wanted later today to look to sell the fib targets up there, pretty high probability trades, both of them, and you can see that the fib levels almost to the pip worked. Even previous moves yesterday during that explosiveness. Now the first one was such a big force of a move. You know, the first swing, maybe it was like right here, and if you got short at those fib targets up here, you know, you might have lost this one. You won here, you won here, you won here, you won here, you know, and you also won here if you sold it a little bit, not much, maybe 20 pips. But the point is, fib levels work even on the biggest days. Typically the smartest traders and the biggest traders in the world don't fight the fibs. Now the pound was consistently stronger than the euro today. Let's say you traded the euro last night, and then when the pound showed up as having extreme strength, you might have bought this little pullback here, bought this pullback here, bought this pullback. Now again, when the market's way above the upper containment band, don't get greedy, draw your fibs on there, and you can see today that these fib levels right here, market stalled for, you know, 3 or 4 hours before trying to go higher, than it, you know, coming back down. That last wave up right here before, you know, the final push up, look where it went, right to the pip. You know, so always draw, if the market makes a big move, redraw your fibs. These are great places, and most likely the, you know, maximum profit you're going to have during the day, and a great place to go short. You can see explosive fall, explosive fall. Dollar Swiss, very excellent one to sell today. Weak dollar, strong Swiss, and of course, you know, this thing did drop, and it fell yesterday. It's underneath the hourly. Here you have a nice little pullback close to the hourly here. We have the previous day's low. When it broke down back underneath the previous day's low, great place to get in. And again, you never know where these currencies are going to go, but usually they go to the fib targets. And this one went a few pips underneath there before retracing, and once, you know, it has a new wave down, you have to redraw your fibs on this last move, and you know, within a few pips the next fib target found the low. And when fib profit target levels are underneath the lower or outside the upper or lower containment bands, they tend to work extremely well. And believe it or not, most days the odds of a reversal underneath the lower band and when this hits are much higher than for continuation. It's more likely to go up 30 pips and down another 30 pips, in other words, in the next hour or two. So, great places to go short, and when it's way underneath here, you might want to look for a counter trend trade, whether you hold it for 20, 30 pips or, most of the time they'll eventually work their way back up to the hourly here.